Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, and we're at the 7th of July, 2025, 6:45 p.m. Central Time. One more day left on the sale that we have. So again, 40% off any of my packages here, which are the research. So if you're a futures trader, roughly is going to cost you $94 divided by 12. So it's just under $8 a month to get 25 videos with each one 15 to 20 minutes long or longer, with 40 charts, reasons to look at the market a certain way, weekly charts, daily charts often. Certainly every weekend you're going to get the weekly charts with its special reports and updates. Now, when we do a trade, we track it from beginning to end in the video. So that might be something you want to do, and we certainly teach. So as you're looking through how this is all going here, these are the courses. This is normally a $600 course. Why? It's many hours of videos for you to learn from and not overwhelming. You should be able to finish the course to learn in about a week and a half, 2 weeks. But it is not to be run through. It is to learn. Don't go to a next chapter unless you understand the one you're in. Can't make it any simpler. It comes with the software you see me use in these reports, my written twice daily update, and then you're going to get the morning futures video and the morning spider video. It's quite a deal for that. And then the outside day and the Bollinger Band course, which to me are my two favorite techniques that I work with consistently. So all you do is go to iraepstein.com. There's going to be icons up throughout this whole video. Let's now go and take a look at something else. Today's tariff day, or the beginning of it maybe is the word we should give. And President Trump, the rates were set today for 13, 14, I didn't even count how many countries were here. But the guideposts, guardrails, were sort of given for this group. Now, I cannot say that Japan and South Korea don't send us a lot of product. I'm not going to say that about Myanmar, Bosnia, some of the other countries you see here. But 25% tariff. Japan went up 1 point. The president wants to make noise. He got really upset when Japan has a shortfall of rice, and they're not even importing U.S. rice. This is the wrong guy to do those things with. South Korea, they got no change. So they're sitting there from 25%, they're staying with that. Keep in the back of your mind, both of these countries import very little from U.S. cars. I don't know that that's because they just don't want them, or the cars just aren't what the people there want. Remember, American cars typically, they're expensive, they're gas guzzlers, all right? They're better, but that's what they are, and they often don't fit that. I wish I could say that's not the case because you got the Genesis. That's a top-end luxury car. I've seen the gas models. It's a gorgeous automobile. I mean, a scale 1 to 10, I think for what it is, it's a 9.5. Pretty cool car. Then you got the Kia, Hyundai, and of course you got all the Japanese cars coming at you through here. So there's just an awful lot. But American cars don't do real well in those countries. So they got to figure out ways to buy more from us. It could be energy. It could be crops. Japan got punished because they didn't buy rice. It could get worse for them before it gets better. The other thing the president did, he made it clear through Scott Bessent this morning, who was on CNBC, that July 9th is not the starting date for the tariffs. It's now been pushed back to August 1st. Now you'll say, oh, again, he's pushing. This is the art of negotiation. Feel the pain. Your tariffs are no longer, none of these are under 25%. Some are in the 40%. And that's painful for a lot of these countries. You want to get them down, you got a couple of weeks to do so. Now we're going to get a lot more countries in front of us. I, of course, am looking hard. What is Mexico, Canada, and the European Union going to come in at? That's what I'm looking for to see next. We're going to get in the morning the National Federation of Independent Business, the Optimism Index. That's at 5 in the morning. That's Central Time. Redbook sales at 7:55. The Federal Reserve consumer credit, and last time, they're looking for the May credit to expand about $11 billion from the prior month. So people are just loading up on their credit cards. Eventually, you got to pay that money. We'll see what happens. And interest rates, well, they're fairly high. All right. So let's take a look, if we could, at the chart action. And when we see what's going on, you have another down day in the markets. Now, it was a pretty good down day today, and I'm not surprised by it, but I thought the market would hold up a little better than it did, and it's sliding tonight. What is going to be important for tomorrow is, do we get the Tuesday reversal pattern, where the markets look at this and decide that we wake up in the morning and everything's actually on a higher bent? That would be what I would like to see, to just call this one of these pullbacks that offered you more. Another event that happened, and I think you realize that, is in the energies. You saw OPEC, and we got meetings coming up on the 9th and the 10th now, but we know that they're going up to 458,000 barrel a day increase over all those 412,000 or whatever barrels a day that they've been doing since April. So they're grabbing back their market share. Gold is acting okay with this. It's not back down under the 3,300 level, and you're holding up near $37 an ounce in the silver. The market that got hit hard was the copper from the 520 level, and platinum down a bit. So let's take a look at what we've got. In the gold market, for the week, as of right now, you're up 0.38%. Okay, so the market didn't get hurt. The chart action here is difficult. You can see that, I think, just visually. But what you have when you put on the swing line is you see that you've made a pattern of higher lows, and now you have higher highs. So the short-term move is to the upside. That's an uptrend. Higher lows, higher highs. That would get violated if you took out the lows of Monday. So you don't want to see this market getting back under the 3304.40 zone. What else? The 18-day average should be the resistance, 33.65. It's from there the market's got to decide what it's going to do. Closing up and over 33.76.90, to me, would be a sign that the market wants to move even higher than that, possibly attacking these highs back here. It hasn't done it yet. Let's see what it does. In terms of the Bollinger Bands, which were an algorithm that tries to keep the market within them 95% of the time, they did their job. You can't argue that. Came down back here and here, supported itself, and come back up to that line in the sand, the 18-day average of close. And momentum, which was oversold, is trying to point up again. And that's why I say the 33.65 is your resistance. The gold-silver ratio is still favoring the silver. We came up and gave it a kiss last week. Remember, I was mentioning that. When prices come back up to that 18-day average and they've fallen under it. When you look at the silver, it did get up to its upper Bollinger Band. And what this market is doing now is spinning. It's gone into, think of this, when the Bollinger Bands go sideways like a pipe. And price is the spring within it. And it's going from the lower band to the upper band, and it's spinning around in here, building for a move. The big question is which way. Right now, momentum up, trend up, bias up. So far, everything at this point is still on the friendly side. Copper market never did embed, got overbought, fought a nice battle for 5 days at the upper Bollinger Band, and then fell apart. Where did it stop? How often do you hear me talk to you that the 18-day average is so darn important? It's the neutral zone, the DMZ zone on a chart. Market fell right there, looking to say, okay, I'm out of the uptrend. Am I in a bear trend? What the heck am I now? And I don't think you can answer that question. You have no trend on the swing line. The momentum's pointing down, but the bias is up. You don't have to guess on it. As you take a look at platinum, as I've said, since you lost the bullish reading, I don't trust the market because, number one, it went up and took out the high that you had prior to that. That's a sign of good strength when you have a loss of a reading, can't hit that 18-day average. It also, at the same time, is the market running against the upper Bollinger Band. You only close over at 5% of the time. So trying to buy on that rally into it, fool's play, in my opinion. And momentum pointing down. Bye-bye. I don't see anything there just yet. And in the dollar index, I've been looking for short covering to develop. The market got down here, played around, oversold. You're getting it. Notice what it's getting up to and trying to fight at. What is that number called? The line in the sand, the 18-day average. You got up today to 97.33. We'll see if tonight it can hit the average. It finished at 97.39. It's going to drop a little bit tonight, so we'll see what that market can do. So you put this all together. You come up with your game plan. And we will see where the markets want to go from here. I think you had a lot of buying on the deep break today in this market, in the stocks. Now we'll see if they go anywhere. I'll catch you in the futures markets as we do the full financials, I hope in the next video that you want to watch. In the meantime, I'm Ira Epstein. Take a look up here at these icons. Join us. Remember, we record 6 in the morning, the futures video, and I begin at 9. The Spider ETF. I want to get all the morning reports out. They come up generally between 7 and 9, and then I start recording, okay? And remember, every trade that we look at, we follow until it's closed out within these videos. I'm Ira Epstein. You have yourself a great day. I'll catch up with you tomorrow.